The day was May 6, 2010. It was a relatively normal day for traders on the US stock exchange, until it wasn't. At that time, Navinder Singh Sarao was working from his childhood bedroom in his parents' house in London, as he always did. But what happened next would go down in history as one of the biggest flash crashes the US market has ever seen. You're watching Wealthy Buddha, and today we're diving deep into the life and legacy of Navinder Sarao, and how one man's genius ultimately led to a $1 trillion market disaster nobody saw coming. Navinder Sarao was always naturally gifted with numbers. After graduating with a computer science degree from Brunel University in 2003, he decided to answer a newspaper ad asking for futures traders who worked well under pressure. The advert was posted by a company called Futex, an offbeat trading firm located above a supermarket about an hour outside of London, where traders could gain experience in exchange for 50% of their profit. During his time at Futex, Navinder gained notoriety as a sort of godlike genius figure that was always able to time the market almost perfectly and make loads of money. At the same time, Nav was a bit of an eccentric. He moved his desk far away in an isolated area and would wear large noise-canceling headphones while he worked. Nevertheless, Navinder was able to achieve a net worth of around $500,000 by the time he decided to leave Futex in 2008 to set out on his own. Nav returned to his parents' house in Hounslow, a working-class suburb of London, where he continued to trade the same E-mini S&P 500 futures that he had been working with at Futex. 2008 was, of course, a time of financial turmoil in markets around the world, which is the ideal situation for a trader like Nav, who stands to make a lot of profit from the market's volatility. This is when Navinder took his earnings to the next level. While markets were crashing in the US, Navinder understood that the federal government would most likely have to step in and prop the market back up themselves. So, one Friday in 2008, he placed a trade betting all of his money that the market would rebound. Turns out his timing couldn't have been better. By the time Monday rolled around, the Fed announced that they were buying up all of the assets that were clogging the financial system, and as a result, Nav's net worth skyrocketed as the market rose significantly. By the time he completed his trade, Nav had made over $10 million. Throughout the next year, Navinder would continue to find great success in trading, but a dark shadow was looming in the distance, and Nav was about to meet this foe head-on. In 2009, a new breed of traders began to flood the market. They were known as high-frequency traders, otherwise referred to as trading bots. For day traders like Navinder, these bots were a nuisance because they executed trades at a fraction of the speed that a human could, meaning Nav's profits were being very slightly eaten away by these high-frequency transactions. Out of frustration, Navinder decided he would design his own program to combat the HFTs. He knew that they made a profit by scanning orders placed by other traders and executing trades based on these orders before anyone else could get to them. So he hired a software engineer to build him a program which would place a buy or sell order, then cancel the order and take the opposite trade, meaning the HFTs would lose money from the artificial supply or demand, and Navinder would make money by trading against it. Using this new program, Navinder would make millions of dollars over the next few years, obtaining a net worth of over $70 million. Then came that fateful day in 2010. It was a normal day for Navinder, who was using his program to place 6 sell orders of E-mini S&P 500 futures worth over $200 million, which he of course planned to cancel before they went through. It just so happens that at the same time, the U.S. mutual fund Waddell & Reed decided to sell 75,000 E-mini contracts valued at $4.1 billion. This was enough to send shockwaves of panic throughout the market, causing several stock indices to plummet by a record-breaking 9%, wiping $1 trillion off the market in a matter of 30 minutes. This anomaly would be later known as the flash crash of 2010. However, the market recovered just as quickly as it had fallen. A CFTC 2014 report described it as one of the most turbulent periods in the history of financial markets, and Navinder had earned over $900,000 in a single day by the end of it all. It wasn't until 5 years later, in 2015, that anyone even knew of Navinder's involvement in the flash crash. At that time, an unnamed trader from Chicago was backtesting his trading system when he noticed the weird orders that were placed that day and decided to inform the CFTC. After further analyzing the data and concluding that Nav's positions were part of the cause of the crash, they got the Department of Justice involved. As it turns out, Navinder's nifty program that placed large orders and then modified and canceled them was called spoofing, and it's illegal to spoof in the United States. In February 2015, half a dozen police officers, 2 DOJ prosecutors, and 2 FBI agents flew to London to detain Navinder, who was sleeping upstairs in his bed at his parents' house when they arrived. Navinder was charged with 22 counts of wire fraud, spoofing, and market manipulation, which could land him up to a maximum of 380 years in jail, and his bail was set for over £5 million, a figure which the court thought was more than fair considering the company he had formed to manage his assets, NAV Sorrel Futures Limited, had reported earnings of over £30 million in the previous 5 years. But as Navinder's lawyers began the process of collecting bail, they would soon learn the harsh truth of NAV's finances. He didn't have the money. Navinder wasn't the typical flash boy of modern trading. As we all know, despite making millions of dollars, he still lived in his parents' home. He never bought sports cars or flashed his money around. He even bought the majority of his food using coupons from McDonald's. In actuality, his parents weren't even aware of the amount of wealth their son had accumulated. All of these facts would later work in his favor when it came to his arrest, but Navinder currently had a much bigger problem on his hands. You see, in addition to being a genius, Navinder also had Asperger's syndrome, putting him on the autism spectrum. So while he was able to find enormous success in trading due to his extraordinary mathematical abilities, he also suffered from some fairly severe social limitations. His frugality was due to his near-obsessive drive to hold on to as much of his wealth as possible, and that also led him to invest the vast majority of his money in various ventures that he was convinced would bring him large returns. The problem was that the people he had decided to entrust his money with were frauds. Although some of them had been sending him fabricated return statements showing the interest accruing in his accounts, when Navinder desperately needed to withdraw his investments, they were unable to return the money that was rightly his. As a result, Navinder ended up spending 4 months in prison, surrounded by predators and violent offenders, until the court finally agreed to reduce his bail to £50,000. Navinder would later describe the months he spent in prison as a time of complete torture for him, where he was unable to sleep and lived in constant fear and anxiety. A year later, Navinder was extradited to the United States, where he pleaded guilty and agreed to forfeit $12.8 million, which was determined to be the full amount he had earned from his spoofing program. By that time, his lawyers had been able to wrangle almost $7 million from his offshore accounts and other investments, which Navinder paid within 10 days of his guilty plea. Prosecutors decided to only give Navinder a sentence of 12 months of house arrest due to the fact that he had not spent his money on any luxuries and had agreed to cooperate with federal authorities to help them identify other fraudulent trading schemes. Navinder was banned from trading altogether, and he now receives public benefits and lives on $336 a month. He spends most of his time playing video games and watching sports at home. He has said that he will never do anything illegal again due to the guilt and remorse he feels for putting his family through many hard times. As we listen to Navinder's story, it brings up some deeply philosophical questions about morality. Many consider NAV to have been used as a sort of sacrificial lamb for the Trading Commission, someone they could point the finger at and blame for a much larger ongoing issue. To many traders worldwide, NAV became a folk hero who made a fortune fighting against Wall Street supremacy. In an environment which can be rigged by rich, well-connected entities which have long practiced manipulative tactics, Navinder was the outsider that used their own strategies against them, and he was ultimately punished for it. This just goes to show that morality can have blurred lines, and sometimes the same action can be considered as right or wrong depending on who you ask. Let us know what you think of Navinder's story in the comments down below. Don't forget to like and subscribe, and from all of us here at Wealthy Buddha, thanks for watching.